who the IRS is, and we don't want to have financial troubles and situations with them.
And that is
But one of
really
the
awesome. That is really awesome that you say that, and I hate to jump in right there, but the reason I think that what she's talking about is if whether it be tax bot or if you find another system, because people go out and they keep receipts, and I'm sure you've seen this before, and they'll keep receipts all year, and then when it's time to pull them out, they got a blank piece of paper because the receipt done bled through or the writing is so faded. So that tax bot or whatever system you use to keep track of that is definitely needed.
Most definitely, most definitely. I mean, being a home-based business owner and having it's a real unique tax situation. You know, certain deductions are available to only home-based business owners. But like I said, you must keep good records, and that tax bot allows you to do that. And you have to determine the business portion of your home expenses. So you can't write off everything in your home or your entire, square footage in the home. So I try to tell people about that. You have to learn more about the actual deduction. So even if that's going to irs.gov, you have to learn about it. But I'm going to go up probably over a couple of different ones that you should most definitely, look at. And the first one I'm going to talk about is understanding the principal place and business concept of your actual taxes. A lot of people don't even understand a Schedule C, a Form 1040, things that a business owner has to utilize when they're doing their taxes. So before you start taking those tax deductions for your home-based business, you must meet the IRS qualification that your home is a principal place of business. So I'm just going to be able to talk about a lot of the different alternatives of a simplified home office. Some people consider their bedroom as a home office, but yet they have no desk, they have no computer, they have nothing in there that would consider that as a home office. So you have to make sure that you are basically conducting yourself in a right manner so that way you will not get, tagged for fraud and different things of that nature. Because guess what? If you're a home-based business owner or a regular business owner, the IRS is going to audit you, especially if you have too many deductions, but yet the income is not adding up, or they feel like they need to audit you because they do audits a lot of the time.
Mm-hmm. So let me see if I get this clear. So basically, if somebody's trying to write their home off as a principal place of business, they have to have office supplies or like just a basic desk in their home?
Well, I'll get into that a little bit more. So your home office expense deductions, it's a good one. It can save you a lot of money in tax time. So if you're self-employed and you work out of your home, but don't, you most definitely have to have some type of desk, computer setup. You have to have office supplies, whether it's paper, pens, notebooks. I'm not going to say you have to have an actual, drawer, but you have to have some type of files. Whether, like I said, you can't have a sofa and your kids are all over it in your laptop and you claim that as a home office expense deduction because the space will be in question. It must be used exclusively for business purposes. Mm-hmm. So if you think of a spare bedroom, you dedicate it entirely to your work, or a garage, you adapt it as like a workshop with no room left over to park your car. This can be used as a home office.
Okay.
It can be used as a space for a home office. The space must be your principal place of business. So you run your operation from day to day in this exact same space. If your work involves meeting with clients or customers at their location, this is it's permissible if you always return to your home for work area due to the different logistics of it. Because in relationship marketing, we do go out, we do meet up with clients and different things of that nature. We might meet up in a Starbucks, so I may not be at home all day long, but my home is a principal place of business for me to do whatever it is that I do as far as booking travel, as far as, doing taxes for my clients and different things of that nature.
Okay. Well, that's definitely awesome. Now, with that being said, because I know some people probably out there want to ask this question, how would the IRS know? How would the IRS know that I got a sofa back there and little Johnny and Boo Boo and all of them and not jumping off of it? if they audit you, can they come out to your house and regulate that?
They most definitely do. The IRS this year especially has really bumped up on what do you call those fraud investigators and different things of that nature. They have really bumped up on fraud investigators, so they can come out to your home. They most definitely can. They can send a fraud investigator out to your home, just like any other type of investigation. They can audit you. You will receive a letter from the IRS if they want to audit you and you don't provide them with the documents that they need. If you don't provide them with the documents, you can end up owing them back money.
And the one thing, the position as a business owner you do not want to be in is owing the I, the R, and the S. Those are three people you do not want owing money to.
That's so true. So as far as, calculating your home office deductions, you're going to use a Form 8829. Now, this requires that you determine the percentage of your total area in your home, then the area that you exclusively use for business purposes only. So if you have total, let's give an example of 2,500 square feet, and if your work area is only 250 square feet, you're entitled to deduct 10% of the qualifying home expense because that's what's dedicated to your business. You cannot claim the full 2,500.
Okay. Well, you've given us some great, great tools and dropping some nuggets on us tonight. Can you hang on the line with us for the rest of the show?
Yes, I most definitely can.
Oh, man, I love it. I love it. So I hope you guys, I'm not going to say I hope, I know you guys are getting some, so tune in. Stay tuned. We're going to go to our first commercial break, and we'll be back. We got Miss Shanice Hollins on the line, just dropping some tax information on us for all you business owners out there because it is the season. And again, before we go real briefly, I just want to let you know, if you're a business owner, making sure that you have a good tax professional or CPA in your corner is vital to your existence. And we'll talk about that when we get back from break. You're listening to Getting Down to Business with Sean Bailey, a financial lifestyle planner, on 108 Praise Radio. We'll be right back. All right. You're killing it, sis. I appreciate you.
Oh, no problem.
Yeah.
I'm always here when you need me.
I know. We killing it. We dropping it on them tonight. We dropping it on them. The music playing?
Yeah, it's playing.
What you playing?
Bizzle.
108 Praise Radio.
I just had put on some hip hop. That's cool.
What kind of hip hop? Circular hip hop or?
No.
I got church going wild.
Don't play that? I got
Church going wild is dope. I like that. The beat is kind of tough though. We got another call on the line too. You see it? Oh, is that the radio?
No, that's.
The 770-337.
That's me.
Oh, that's you. I don't know why I don't know your number by now. So, sis, tell me where you want to go. Where you want me to direct you next?
You said what happened?
Tell me where. Oh, she can't hear over the music.
No, good, good.
Tell me where you want me to go next. Where do you want to take this next? Coming up next. We can keep delving.
What do you want to talk about? Do you want to talk about?
We can keep delving into the deduction aspect of it, and what I really want to do is that we're going to delve into, talk about a couple more of the deductions that you can really benefit. And then we're going to go back to the business aspect because I really want to go back and forth dialogue with the people that do get a deduction. Because I'm going to segue to it. I'm going to say, a lot of business owners feel like they're going to owe taxes, but some people do get refunds, right? And then we'll talk about how we can reinvest some of those things back into their business or back into themselves. And then we'll also talk about people that are W-2 and getting refunds and how now's the time to start investing in the business, and you know what I mean?
Right.
Okay.
Okay, that's no issue. I got it.
And then we definitely going to take an opportunity to go ahead and plug Evolution Travel. Evo, we taking over the world. Taking over the world.
I sure will.
Right, Courtney?
Definitely.
Courtney is the engineer. He's the guy that we signed
Welcome,
up.
Courtney. Welcome, Courtney.
How you
To the
doing?
family.
Welcome.
He talking real low like you can hear him. He said, "How you doing?" But he's my guy, man. That's the marketing guy I was telling you about. So I can't wait for us all to get. Matter of fact, we're going to be in Vegas for the Stellars when the 24th of next month?
Yeah.
Or 24th of next month. If you can come out, that'd be epic.
She's
Okay.
gonna be there.
She's in Arizona. DeAndre left?
Yeah, he left. He did his thing. I just gotta look at it, post everything tonight. So set up. Ready to get back in?
What time we gonna go to?
Hmm?
What time we gonna go to tonight?
8:15. Alright. And bring it 1, 2, 3. You're live.
Welcome back to 108 Praise Radio, Voice in the Gospel. You are listening to Getting Down to Business with Sean Bailey, your financial lifestyle planner. And we got Miss Shanice Hollins on the line. And we've just been talking about it this tax season. We've been talking about it. So when we left off, Miss Shanice was telling us about some deductions about your home-based business. And we were really discussing the aspects of how you can get some deductions based off your home. So but with that being said, are there other deductions that you can really kind of, I know you said there's over, 400 deductions?
Yeah, there's over 470 plus deductions. And I know that we were talking about the home, and, I just wanted to touch a little bit more on the home because the home is like one of the biggest expenses. Now, we touched on the home office, but we didn't touch on the actual home.
Okay.
Because the home office space is one thing, but, you also can write off certain parts of your mortgage and different things of that nature. So I just want to touch a little bit on that as far as the Schedule C is concerned.
Okay.
So if you have a Schedule C to determine your business taxes, like I say, you can use the Form 8829 to calculate for your home office. But as sole proprietors and single member LLC owners, like I have an LLC, you can file business taxes on a Schedule C. So that's in addition to your home office expense deductions for business filers. You're limited in some cases, but you cannot create a business loss with those different expenses unless you have a Schedule C.
Okay.
So I just wanted to make sure that everyone knows that. Now, if your business is a corporation or S corporation, and you are an officer of that corporation, you are paid as an employee. Employees can deduct some of those office expenses. So say, for instance, if your business is used for home or for the convenience of your employers, you do not rent any part of your home to your employers, and they use that part of the home for business. Guess what? Those employers can use that as a write-off as well, even though that they're receiving a W-2 and you're doing a 1099 for them. So even as a home-based business owner, you can hire your children and utilize that as a write-off. So I want to make sure everybody heard that portion of the different write-offs for the home office expenses for employees and for partners as far as business partners.
Did you say we can employ our children?
Yes, sir, you surely can. I actually have a client that employed their children and some other children in the neighborhood to be able to pass out flyers on a weekly basis, to be able to go from not door to door, but from post to post in the different apartment complexes and post the flyers on the apartment complex, bulletin boards and different things of that nature. He paid out over $3,500 to all these children in the neighborhood. So he was able to use that as a tax deduction.
That is awesome. And another thing that I know from just being in my financial background, I tell a lot of my clients, if you have your children employed at your business, people don't know that you can actually contribute to a retirement account for them as long as they have earned income. So
That's absolutely true.
So that is definitely dope. So now we talked about the home. So let's talk about a couple of myths, because I hear people's always saying they try to write stuff off. So with me being a financial lifestyle planner, I wear suits on a daily basis. Can I write off my clothes?
Well, yes, you most definitely can write off certain portions of your clothing each year. It varies. It's just like even as a home-based business owner and just as an employee. So say, for instance, if you receive a W-2, we'll talk about that because I know there's a lot of people who receive a W-2.
Mm-hmm.
If you are a nurse and you have a job where you have no choice but to purchase those different clothes, a firefighter, something that's of high importance, and there's a list on irs.gov that will give you those different careers that can write off specific things, and those, as far as business owners, you most definitely can. Just like as far as a W-2 employee, they can as well. But it has to be a one of those careers that is deemed as an emergency career as far as W-2 employees. So nurses, doctors, and there's a couple of other ones, but RNs, those are the ones who can write off their actual clothing that they have to wear to work for their taxes purposes. And then the business owners, we can up to a certain extent. So each year it changes. I know last year was about 10% of the write-off of your clothing for business clothing only. So each year it changes.
Okay. That is definitely awesome. Now, let me ask you another question because everybody says this. Everybody's looking to write off their meals, right? They say, as long as we discuss or talk about business, we can write this off. Is that inherently true? Like, is that really true? I mean, do it have to be like, do you have to set it up, or can, like, you have a spouse and you and your spouse go out and you talk about your business for 2 minutes? Can you write that whole meal off?
Well, it does have to be a business, transaction, a business meal. So say, for instance, as we talked about earlier, when you have clients and you go outside the home, you guys are at Starbucks or you're sitting down, different things of that nature, that is considered a meal write-off. Now, to write off the meals and entertainment, because that's what it's called, meals and entertainment, to write that off is 50% deduction. Anything under $75, you do not have to have a receipt for. Anything over $75, you have to have a receipt for it. So say, for instance, if my founder in my company, Mr. David McCovey, that's the founder of Evolution Travel, if he decided to take myself and our Elite 8 members out to dinner and we're having a business discussion or a business party, guess what? It's a write-off for him.
Okay. So basically, we gotta make sure that is, because again, that is something key that I tell a lot of my business owners. Is a business lunch. We can definitely write it off. So I definitely love that aspect. So let's talk a little bit about the people that are W-2s. When people have W-2s, can they get like itemized deductions as well?
Well, it's kind of hard for people to have W-2s to get itemized deductions because of the simple fact that they are not business owners. So what actually are they itemizing if they're not in an emergency career field? So that's kind of hard for them to get itemized deductions. But one thing I did want to make sure that we touch on as far as separating the business from personal, because most of the time the W-2 employee doesn't have the same as business expenses as a business owner would have. So they can't, write off the meals and entertainment and different things of that nature. So we have to be careful to separate the business expenses from the personal expenses. Then separate expenses in two different categories, and I'm going to talk about those two categories. Those categories are direct and indirect. Now, let me tell you what the direct expenses is. The direct expenses are those that's used only for the business section, of either your home for business purposes, when you're going out for meals and entertainment, for business purposes, for mileage, anything that you can claim. Now, the indirect expenses are those that are paid for running your home-based business, but not necessarily attached to what you do on a daily basis. So you can deduct, different percentages of your home-based business by calculating your home office space, like I talked about TaxBot before, you can calculate your mileage that you utilize, but you can't calculate the mileage that you utilize for regular and personal things. So if you're just going to the store back and forth, you can't calculate that mileage unless you're going to the store buying groceries for a business event or for a home event, something of that nature. So I just wanted to clarify that. before people think that they can just go out and claim all these different deductions without actually having that proof. And the typical indirect expenses that include your rent, your mortgage, your interest on your mortgage, your utilities, the insurance, and general home repairs. And that's just for being a home-based business owner. So imagine what a franchise business owner that's in a building somewhere can write off. It's almost the same thing, if not more. They can rent off, their rent that they pay at their place where their business is, their real estate taxes, the deductible mortgage interest, homeowners insurance, if they pay renters insurance in the place that they're renting, renters insurance, repairs, utility services, electricity, the gas that you use as far as the mileage when you put gas in the car. And things can be depreciated as well over time. So, say for instance, you bought a computer for your home office or for your office at your business, then that can be depreciated over time.
Oh, okay, that's awesome. That's awesome. So, with that being said, we know, speaking of home-based businesses, there are a lot of people that are probably listening right now that have they have a 9-to-5 and then they have a home-based business. How does that affect them?
Well, actually, it's a great thing because as a W-2 employee, they're not able to itemize all the things that they're able to itemize as, a home-based business owner. So even if they're part-time in their home-based business and working full-time, they still can claim their W-2. Not only that, then they can claim those itemized deductions once they receive that 1099 as a home-based business owner. So it's it's so vital that any W-2 employee becomes a home-based business owner. It doesn't matter if you're in that industry and you're not, the top sales income earner or anything of that nature. Just having that 1099, you're able to write off so many different things on your taxes. And the thing about it, most people think, okay, well, I just want a check back. It's not just about getting a check back. It's about making sure you don't owe the IRS anything, not owning them. I've had clients where they've made over $200,000 and they've gotten over $10,000 back in tax deduction. Now, normally, a person that's made over $200,000 will end up owing the IRS if it's just a W-2 employee. Now, if they have that 1099, and they're writing off those deductions from their home-based business, then they most definitely can take down all of those deductions that, things that they may owe the IRS. So in return, they end up getting more money back because of the different expenses that they've had during the home-based business that they're claiming on their taxes.
Well, that is key. Well, folks out there listening, now's the time to get that home-based business started. Now is the time to maximize those deductions because now here's the one thing, and I know it's the kind of I'm not even gonna say it's the elephant in the room, but we understand what type of political season we're in, right? We understand who our president is, right? Donald Trump is it's hard to say. Jeez Louise, it's hard to say, but Donald Trump is the president, and when you obviously I do a lot of marketing on social media, you see that. I haven't got my return back or whatever the case may be because Donald J. Trump, whatever the case may be, joke. How is this presidency affecting people's taxes? Because I've seen both sides. I've seen some where his tax strategies may help home-based business owners or help business owners. Would you agree with that from what you've been seeing so far?
Well, I believe that it's helping a lot of people. I see the jokes, and I've even posted jokes about, Trump and everything. But right now, a lot of people, what they're seeing happen with taxes being held and different things of that nature is because of the new laws that's out there. You have a lot of people that are claiming other people's children on taxes and different things of that nature because guess what? They're trying to get those tax breaks and they're trying to get extra money. And they wouldn't have to do that if they had a home-based business. So now you go into other avenues where now you're committing fraud. And that's what they're doing right now. They're trying to make sure that there is no fraud with the people who are claiming the child tax credits and things of that nature. So that's the main reason why people's taxes are being held up right now, because of that child tax credit law that just came out, and making sure that they are not claiming other people's children. And I know so many people who have done that before, and people who have asked me, and I'm like, no, I'm not doing that. You need to talk to another tax professional, which if they're professional, they most definitely won't allow you to do that because they don't want to lose their P10. So one thing about it, it's everybody's joking right now, but Trump, he has absolutely nothing to do with it, because, I mean, these rules were put in place before he came into presidency, as far as the child tax credit law that was already put into place before he was even elected. So, we knew last year, before November timeframe, that all of these things were going to happen this upcoming tax season. So we learned about that last tax season. It's just most people are unaware because they're, uneducated about it. They are not on the IRS.gov websites, like a tax provider or a CPA would be on a IRS.gov website. So, a lot of times we joke about the things, and it's very, very funny, but Trump has absolutely nothing to do with what's going on with the IRS right now.
Well, I appreciate that, and I knew that. I just wanted to hear you say it, because one of the things that you said that was so powerful, and when things and things that matter to us, especially, when talking about money, I always tell people, don't just rely on me to be your source. Educate yourself about finances. My job is to educate people enough that they can make an informed decision. And when taxes are such a big deal, especially now, you'd be surprised how many people give you information on taxes, and you're like, well, where'd you get that from? Facebook. Really? Now we're really starting to get our pertinent financial information from social media. IRS.gov is on there, so we can understand it. And I think that you drummed that point out perfectly. We need to be educated on the things that's happening, but people are just fearful because even with the child tax credits here in the state of Georgia, we've had a lot of fraud where I actually had 3 clients that went to go file their taxes, and they were basically told, your taxes already been filed. That is a horrible, horrible day. So you're definitely right. The holdup is being held because there's mass amounts of fraud coming out. They're just trying to clean it up. So I definitely think that. So Shanice, I appreciate you holding it down. I know you're with us for the whole hour. We're going to go ahead and take our second break. You are listening to 108 Praise Radio, Voice in the Gospel. You're listening to Getting Down to Business with Sean Bailey. I'm your financial lifestyle planner. We'll be right back after this break. Good.
You pausing this?
Shanice, you killing it. Somebody phone dying.
Thank you, brother. When I come back, I'm going to talk about how they can get the child tax credit and some other things that I need to real briefly, before you, if I can, before you ask your question.
Okay. So what we're going to do is we're going to come back. I'm going to open it up, saying we got you. Please call in. Give people an opportunity to call in and ask some questions. And then, like I said, we're going to go, because we started at 7:15, so we're going to go to about 8:15. So you're doing perfectly.
Okay.
So around 8:05, I really want to, I'm going to say the show is sponsored. This show is sponsored by Evolution Travel. Evolution Travel is, that's what I'm trying to figure out what to say.
So it's brought to you in part by Evolution Travel.
The show is brought to you in part by Evolution Travel, the leading travel company.
Hey sis!
Hey, I'm gonna send you what to say real quick.
Yeah.
Hey, Eileen.
What's going on?
Hey, we can't talk to Shanice and Keandra for the next 24 hours.
I
making fun of my
can't
shoes.
even see what y'all was talking
They
about.
making fun of my feet.